My fellow traders, welcome by the No Limit Forex YouTube channel. In this video, I'm going to tell you how I trade double bottoms, double tops. It's accurate, simple and effective, so let's go. So guys, it's time for the core concepts of the double tops and bottoms and the foundations. So I've drawn here a double top, double bottom and double top formation. Looks like a W, equal lows here, and the double top looks like an M with equal highs here. And probably I think the majority of you know that the Forex market is the ship of the big boys, the big institutions. It's a 9 trillion US dollar market on daily basis. And there always must be a counterparty on the trade. And usually when the retail goes short, the big institutions goes long, which encounters each. And these patterns are taught in a classic technical analysis book, right? When I started trading, I was trading all those patterns, guys, really all those patterns. And often I was wrong, or I knew the right direction and it took me out, and then it goes into my direction. So I thought, okay, this is not the way trading is, and 95% of retail traders losing monies. But okay, let's go back to the double tops and bottoms, otherwise it would be too much off topic of this video. Here we have the double bottom formation, right? This is a classic reversal pattern, and retail gets confirmation by this formation that price is likely that it's gonna reverse to the upside. So in a retail book you will see that you have to place your stop loss below this low here, right? What do you think, what is resting below these lows? I can tell you immediately, liquidity, guys. It's liquidity. So many dollar signs below this low, as you can see, dollars. So what is likely what's gonna happen? Because for price to go from A to B, the institutions needs retail liquidity. So often you will see that we're gonna take out these lows and then boom, right into their direction, right? Because they know the direction, but it's the entry. And when I started trading, you know, you have to use in some cases 30, 40, 50 pip stop losses. I trade now up to 10 pip stop losses with a maximum of 15 pips. But it's accurate, effective and so forth. So liquidity is taken and we completely reverse to the upside. And with the double top formation, it's completely reversed. What do you think what is resting below these equal highs, right? It's liquidity, right? Above this green line there is liquidity, because there are a lot of retail stop losses resting above. So what do you think, what is likely that price is gonna do, right? We're gonna take out the equal highs slash double top and then completely reverse to the downside. Guys, that is the core concept of how I trade the double tops and bottoms. So let's go on to the charts and to show you some live examples. So my fellow traders, now it's time to find some live examples on the charts. And it's really important to mention that you can use this on all time frames, and also it works on many pairs, on all the pairs you will see, as long as you use it in the right approach. As you can see, if we just reading the intraday, the 4 hourly, we can see that we are in a clear uptrend, right? We are breaking structure here to the upside, also here. So the momentum is up. The order flow is to the upside. So what you can do if you know that the order flow is bullish, we're gonna look for equal lows at the downside, or in other words, double bottoms. And here, what do we have here? We have many wicks to the downside. So this is a really, really important region we're gonna look for. And if we go draw our rectangle from the 9th of December to the 11th of December, you can see that these lows are relatively equal, right? No, not to the pip, but that is not always the case, right? Sometimes, like here on the 16th of December, we have a clean double bottom. But this one is still valid because the difference in pip, it's just, I think, let's move this away. It's just 3 pips from here, from this low to this, right? It's also, it's really low. So this one is still valid, right? You have to see it as a region where we are in. So this is a really sensitive region on the chart. Okay, and what is price action telling us? That we are currently in an uptrend, right? So the momentum is up. Many retail traders will go long from this pin bar here. They think, okay, this is a good reversal sign. We have a double bottom plus a huge pin bar, a lot of rejection to the upside. But as you can see, we went to the upside and completely reversal to the downside to take out these lows. So what you're gonna do, you always wait for price to come back to these lows. And okay, it's not always the case that we're gonna take out these lows, but we are just talking about high probability, and I'm just talking about what if price does take out these lows. By now, or you're gonna learn now what you're gonna do if you see that this same pattern occurs on your chart, because you will see many times that price is gonna take out these lows before we continue to the upside, right? So let's see how that seems on the lower chart. What you're gonna do when price take out these lows, and I really like to use just a line to keep our chart clean and crisp. Let's say from here, right? Boom. We have, if we go to the lower time frames, what you're gonna do when these lows are taken, you're gonna wait for a break of structure, right? Market structure break. As you can see, the intraday, the 5-minute time frame, we are currently in a downtrend, right? We are still making lower lows of lower highs here again. But at this point, this high was broken, right? We had this structure high on the 5-minute, the intraday high. We break through with a big fat bullish candle printed on the charts. And do you know what time that happened? It happened actually at New York Open. What do we also have here, guys? We have a lot of liquidity. See how clean this little trend line is? How many times we respected this? So there will be many stops here resting above. And look what we did. We took out all these highs here, which is a sensitive region, guys. And then we reverse to the downside. I apologize. So what we're gonna do, we now know by now, okay, the momentum is up and these equal lows are taken. Then you dive deeper into a lower time frame, for instance the 5-minute, but the 15-minute time frame is also fine. But if you really want that great sniper entry, you go to the 5-minute time frame. We also have extra confluences by now. We have this clean trend line to the downside, which is respected multiple times. And also, what do we have here? Relatively equal highs. So this is a double top. Look what price did. Boom. We took out all these highs. Many stops are resting above. This is a really sensitive region. And if you go to the 1 hourly, guys, and if you dive deeper in, what do we have here? So here, I apologize, here, right, we took out these lows. So also many retail will think that we're gonna continue to the downside. Also when we see these highs here, right, we made a lower high to the downside. We took out this low. But that is not for this video. Let's dive deeper into. What you're gonna do is to wait for a break of structure. So this last high of the 5-minute is broken, right? We break through with a big fat candle, completely reverse to the downside. What you can do, you can drag your Fibonacci. You can drag your Fibonacci from the low to the high and see how price respected the 79%, right? It's that easy, guys. So break of structure, and that is what I call market structure break, or break of market structure. Here on the 5-minute, took out the liquidity, took out here downside the liquidity of the double bottom, and boom, minus 27 done, minus 26 also done, guys. It's that easy. And really, guys, 7 or 6 out of the 10 times you will be right with applying this strategy if you see a double bottom. But it's really important that you use it in the right approach, because you always should use it according the order flow. It doesn't make sense to trade a double top if we are in a bullish order flow. Go with the flow. So look for a double bottom, right? What do we also have here? This is also a double bottom, guys. Here, look. These lows are equally. And boom, what have we done here? Let's go to this example. You will find many examples of this. I will show you. Look here, boom, the 4 hourly. The order flow is bullish, right? We respected this low here, and the majority of the retail traders, they will go long when they see this double bottom. But also look here how really sensitive this region is, guys. We are just in a sideways market, right? If we go to the 5-minute, price at this moment here, we were not able to retrace to the lower to one of our entries. So this one still doesn't work. Quite a bad example, to be honest. Okay, as you can see, and it doesn't work always, nothing is for sure, guys, with trading. But you can also use, if you like, and I do not prefer, definitely need, you can also trade it from the 1 minute, because here, what do we have here? We have here the break of structure, right? On the 1 minute, here we made lower highs. Come on, guys. Lower highs. Again. Here. Again. And here. Again. So the overall structure on the 1 minute is to the downside. Now we know this high is broken. So what do we have? A break of structure. And what you can do, if you prefer, you can also trade the classic, right? We broke this structure high, waiting for a retest. But guys, I really do not prefer. What you can do, if we make a new higher high, which is done here, let me mark that high. So break of structure, and here, guys, we have the new high. It's not necessary to drag it from this one. And then we're gonna use our Fibonacci, right? From the low to the high. Boom. Look how many times we have seen rejection from the 62% FIBO level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 tests of this region. And boom, minus 27, minus 26 hit. So we took out the equal lows here at the left, the double bottom. We wait for a break of structure, and you could go low as you want. Really, time frame doesn't matter. Time, right? It's fractal. It will work on all time frames, right? But if you see that we respect this structure high, which is broken to the upside, and we make a new higher high, what you're gonna do then, guys, is drag your Fibonacci from the low to the high, which is from here. And don't use the wicks. Drag it from body to body, because there is the real volume. So don't use the wicks. Drag it from A to B. As you can see, we got a nice rejection, and boom, to the upside. And if you go from there, it's not necessary to put your stop loss below this low. What you can do, if you find something here, you can drag it from here, right? For almost 4.3R, which is great. If you place your stop loss below this low, it's almost 3R, right? But we also have this low, which is printed on the 11th of December. Boom, 4.5 or 0.5R, I apologize. So guys, this is how you're gonna trade from now. If you see this pattern on your charts, you know by now, and you are able by now, how to take advantage of this, right? Because many retail traders will get stopped out here at this low at 80.25, and then we completely reversal into our direction. Hopefully you found this useful, and yeah, let's get back to the video. So guys, I have one question for you. What is your view on double tops and double bottoms? If you haven't already seen my website, my new website is online, go check it out. The link will pop up below. Check it out. And hopefully you found this video useful. If you do, please do not forget to hit the like and subscribe button. It's like risk versus reward. I will give you the value and you guys will give me the rewards with subscribing. Thank you, see you next week. Bye.